Good morning, everybody. It's Chris here from Stream Education with the Forex analysis update for the 7th of March 2011. Just going to go over the four majors this morning, starting with the Euro against US dollar on our CTC strategy template. Let's have a look at the big time frame. Okay, Euro up and up. This pair has just been moving. Extension wise, let's have a look. Pulled back to its lowest point. We're now clear the 50% fib line and we are moving towards the 61.8 at the 1405 mark or 1404 mark. Friday's spinning top has left the Asian markets indecisive this morning, and ideally what we want to do is we want to see further extension to the upside, is obviously breaking the high of Friday's high at 1460, so testing a round number at 1400, but nonetheless you can see that the price movements in our favor, swing highs, CTCs in our favor, and the last couple of weeks have seen this pair really rally. And notice how the moving averages are well spaced out excuse me, confirming a nice strong trend. The same goes for all the intraday. 4-hour CTCs in our favor, hourly CTCs in our favor, 30-minute CTCs in our favor. And then you go down to the small time frames 15 and 5, they tend to get quite erratic, but you'll notice straight away that we are trading in a consolidation. We have done so for the best part of a day and a half now, make it 2 days. So what do we want to do? We want to cap it. Best thing to do is just cap it. 1400 is our high point, and you can see that we've had a noticeable pause around this area. I know it's not all that great looking, but don't want to be trading that. Too messy for me. So we know straight away that we are on an uptrend on a daily, and if you look at our intermediate, you can see we're all consolidating. So to break the consolidation to the upside, or further extensions to the upside, we want to see a break above 1400 and close higher. Our intermediate trend on this 30-minute chart is, you can see that that price is going to be testing a trend line, an intermediate trend line as we speak. So, do we see a bounce at the upside? This is the all important question. Okay, so don't want to be trading noise. Want to be trading well above, to be very very safe, roughly around the 1401 mark. Closes above 1401 and stays strong like that going into the US session. Then we have game on. Okay, just beware that we have a 61% fib line sitting just below the 1404 mark, so just work out where that is in relation to where we're trading now. That's 1402, so there's a bit of movement to the upside. Failure to do so and a retreat would see a close lower than 1395 at least, would see further extensions, and then we could see price moving all the way back down to either here at 1388 or now strong support at 138500. There's a lot of movement to the downside too. I'll put this one in here primarily because it's playing with the 200 period moving average as well. So 2 ports of call to the downside and a nice even open space to the upside if we break above 1405. Okay, that's it for Euro. I'll be back next for sterling against US dollar. Next pair up, we've got the sterling against US dollar cable, known to us. And here again you can see how this pair has been moving beautifully to the upside. Notice how the 20 period moving average has been acting as a great support area, lending its hand as this pair has been moving further north, and the moving average is well spread out, confirming our strong trend. It has broken above a previous high, and we saw price pull back. These 2 days pretty much gulf is this Wednesday's candle. Friday also spinning top to the downside, negative after a pullback on Thursday. Now we wanted to see a bounce at least in this area here to confirm further strength. It's still trending above this trend line here, so we know the uptrend is still in our favor. CTC is telling us that. Okay, we have our everything is in our favor here. We've got our blue arrow candles, CTC on our side is great, and the moving average is all looking smart. It is pulling back though. What we want to do is see price still trading above at least this trend line as we speak here. So can't drop below 16,2500. Got to stay above 16,2500, which will mean that staying above, we might see something similar to this candle again. Shoot, this is a hammer on the moving average. So we got into the moving average between 1625 and 1620. So there's 50 pips there. So intraday, you can see it's closed lower than Thursday. So ultimately, what we're seeing is a pullback. Intraday, you can see on a 4-hour, for example, we've got a swing low because of that, and that's the trend now for that. So it's got you can see a lot of wicks, a lot of indecision. Look at these ones over here. These 2 wicks we saw on Friday evening just before the close of the market. Very indecisive. I mentioned that it's got to trade above 1620, 1625. There we go. I'll put those 2 in. You can see that there's resistance here at 1625 and a bit more at 1620. So price needs to stay above that. Importantly, also above the 2 intermediate trend line moving averages. So you can see that we are in a pullback. Now that pullback is going to go as far back depending on where price is relative to it. So I look at 1620 because that's where our trend line is. So it can't fall lower than 1620. Put it that way. If it starts falling below 1620, then we're in for a bit of a negative move. Okay, you can see if I draw my major trend line for this time frame, more touches, the solid, they're moving averages, and my intermediate trend line here, you can see we're being squeezed. Okay, so we come from a high point to a low point, and we've got a lower swing, and a lower swing here. So I need to break at least above that. This price swing here at 16.29 at least on this time frame to show you confirmation. You can see that going into the 30-minute charts, very messy. Look at that. It's so skittish. Geez. It's a straitjacket trade, this. Crazy. And then I said 25, 1625 and 1620. We broke below 1625 and closed lower. Then ultimately we should be looking, because we're now being squeezed now between 2 points. Then 1620 will be the next target area. A big time frame, that's the biggest, that's the nearest target. And then if we close below 1620, then we are literally into free fall. So consolidating. Okay, I need to close lower. If we're going to see further downside movements, it needs to close lower than 16,2500. Just be aware of the 200 period moving average moving up on an hourly chart at 1623. Okay, so as it stands now, very, very indecisive on the small time frame. Want to see a definite confirmation breakout either to the upside, so trading well above the Asian market range. It'll need to trade well above the market range to give us that indication, or we could see a break below and see the pair trading lower than at least the 16,2300 mark to show us confirmation of further downside movement. Okay, that's on sterling. I'll be back next with the US dollar against the Swiss franc. Okay, US dollar and Swiss franc in front of me on our CTC strategy. Daily time frame. Pair has been moving sideways for a number of days now, literally the last week. This is after the pair has broken below a very strong support area here at 0.935. Pair has pulled back, then moved lower, and then pulled back it again. So it's literally hanging on to the underside of 935 by looks of things. And then Friday's move south on a failed attempt to post a higher high. I've seen the Asian market trading very, very, very indecisive last night. CTC is very negative, a lot more red than blue. You can see market direction is still lower, and because we're trading below a very strong low point, then things are looking very bearish for this. Let's have a look at intraday time frames. You can see that after that massive pullback to the underside of 935, we saw price fail to the close higher, and what happened was we had swings to the low side. And if you put your intermediate trend line in for this time frame, the 30-minute time frame, you'll notice that price has been moving sideways at a support area, roughly around the make it the 0.9245 mark, bouncing. So there's a support area here. Now we're going to a squeeze. What we want to see is a potential break out of that squeeze pattern. Remember, we are to the downside, momentum's facing to the downside. You'll notice that the movements have been still lower even in this consolidation. Okay, look for a break below the 9245 and close lower. To watch out for these fakes. This is horrible. This is a 30-minute chart, guys. Filthy chart that. So if you want to see a definite breakout of that, and our first port of call would be very, very quick, 30 pips at least to 92110, like to the downside, and then, as I said, we'll be in free fall again, and that'll be the most important. But everything CTC wise is to the downside. Make sure that everything's falling. CTC on our hour is short. CTC the 4 hour, daily, 30 minutes, all more red. Excuse me, more red than blue. So we're just looking for a confirmation breakout below 0.9245 and close lower. Could see further extensions to the downside. Hey guys, that's it for the US dollar Swiss franc. I'll be back next for the last pair of the day, US dollar Japanese yen. Okay, the last pair of the day is US dollar Japanese yen. US dollar gaining a bit of strength last week, and then Friday came along and we saw prices trading higher, only for it to pull back and close lower. So market sentiment is still negative. Price needs to close at least over the 8250 mark in order to be considered bullish. Failing to do so has now still meant the price is still trading below the two intermediate moving averages, i.e. your 20 and 50, and you can see that we're still in an uptrend nonetheless. But long-term price direction and sentiment is that we're just consolidating in a very bearish trend. Okay, so this could be just a slight bearish consolidation with the 200 period moving up in this massive down trend. I mean, all we know, we could see price just moving or consolidating in this band until we hit the 200 period moving average, and then we could see further extensions. But that candle here hasn't done any favors. For this to be cancelled and we want to see further extensions to the upside, today's candle needs to close higher, at least in the 8250 mark, break and close higher, which would take this market sentiment figure out. Otherwise, it's just showing us that we're going to see clear further downside movement. So intraday, you can see that spike out on a 4 hour, for example, probably triggered a lot of people in, only for them to go against. Look at that, horrible. So what has it left us with? Well, we're still trading below the two intermediate trend lines. Moving averages, apologies. Okay, market sentiments, you can see that we are in a consolidation pattern. If I look at 30-minute for example, there still seems to be a solid floor occurring at a certain place. You can see that price is now bouncing to. Notice how the highs are getting lower. Very important. Okay, which tells you that market sentiment is getting less and less. That's how you should be reading charts. Very important. So if I put that one there, you can see that bounce, headbutt. So as things stem now, ideally we want to be breaking and trading higher than 82.45 straight away. Okay, and then that's because all this over here, for example, is making up that head of this wick. If that makes sense. So you put all this information together, all you end up doing is having a nice big dark candle to the downside filled in, and this over here is going to produce that wick, which is what looks like a shooting star. Okay, which, if you see it at the top end of a trend, is indicating momentum change, a market sentiment change. More selling's coming into a buying market, and we should see further selling taking place, and this is quite possibly what could happen. So ideally what we want to see is a close lower than 82.05 at least, or the low of this candle here, the Asian market high, take you below the 200 period moving average, and then you can see further extensions to the downside. Okay, very important. resistance level, support, 82.20. Break of that. Next protocol will be 81.95 ish. Very noisy down these parts, or 81.75. But we want to be trading lower to confirm further downside movement. Otherwise, what we could do is see as a bounce at 82.05, only for to see price revert back to the upside and be showing us further highs. So wait for a break below 82.05 at least to confirm the negativity in the markets, or confirmation break above at least 82.45 to show that we're seeing further extensions to the upside. That's it on a whole for Monday, the 7th of March, on the 4 majors. Have a fantastic day. Not a lot of news out today, but is that good or bad? Just look around for other factors on the market that could swing things. But overall, I think Euro, I think the good news that Trickett's thinking about interest rate upgrades has also made things, aware that we could see the same thing happening here in the UK soon, which is pushing momentum to the upside for Euro in particular. And what we need to do is just look for potential setups so we can trade that momentum. Hey guys, I'm going to close off. Excuse me, got a frog in my throat. But that's it for today. Have a fantastic trading day. Keep it simple, guys. Look for breakouts, look for confirmation setups, and then trade those setups. Don't trade blindly. Don't trade for the sake of trading, like I mentioned. Just look for those potential breakouts and trade them. 20 pips is all we want from the market, guys. We get that consistently, we start becoming consistent traders, and that's where we start seeing our kitties growing in particular. Compounding comes into play, and I assure you guys will be on a winning run in no time. Trade streamly.